All right, looks like we are now live. Hello. My name is Julia Pyper. I am a host of the Political Climate Podcast, which is a podcast on energy and environmental issues in America and around the world, presented by the USC Schwarzenegger Institute. I'm also a contributing editor at Green Tech Media, where I cover the energy transition. And I'm a senior fellow at the Atlantic Council, sort of taking a geopolitical look at the energy and climate space. And I'm excited to be with you today. Thank you, Brian, for having us. And now I'm going to introduce my awesome panel of guests. They don't really need introductions, but you know what? I'm going to give them their full introductions because they've got a lot of accolades. So first with me, I have Jigar Shah, the president and co-founder of Generate Capital. As many of you may know, he, prior to co-founding Generate, pioneered the no money down solar model. He is as the founder and chief executive officer at Edison, which really unlocked a multi-billion-dollar solar market. Jigar's also the author of Creating Climate Wealth, Unlocking the Impact Economy. I read that book early on. It's informed a lot of my thinking. Super interesting. I think we're going to tap into that expertise here. And he's an advocate for market-driven solutions to climate change, which you would know if you listen to the Energy Gang, where Jigar is a host. Hello, Jigar.
Hello. Thanks for having me. It's so great to see you.
I know. Yes, seeing everyone remotely, but we're making this all work. John, hello to you.
Hey, Julia. Hey, Jigar.
Hey,
John Powers. It's just a little reunion here of the clean tech world. It's just hanging out. So John Powers, for those in our audience, he's the co-founder and president of Clean Capital, where he leads corporate strategy, operations, investor relations, and marketing. No short list there.
Keeps us busy.
His passion for clean energy stems from his time serving in the U.S. Army. He helped revolutionize the Army's energy program, first as a special advisor for energy to the Assistant Secretary of the Army, and later as Director of Outreach for the Army's Energy Initiatives Task Force. In 2012, John was appointed to the post of Federal Chief Sustainability Officer by President Obama. So I thought that was worthwhile getting all of that in, reminding everyone of your backgrounds here. So welcome.
Thanks for having us.
We're gonna dig into your companies, what you're doing, the topic of sustainable finance. That is what we're talking about today. But first, I want to roll all the way up to big picture. And Jigar, go to you first to set the scene here. You know, what are we talking about when we think of sustainable finance today? How much is getting invested in fossil versus sustainable? How would you set the scene on that? What we're talking about?
No, it's a great question. And frankly, there's no sort of easy answer. I think, I think that when you think about the climate revolution, I think a lot of us think about deployment finance, right? So this is the Bloomberg New Energy Finance numbers, where it's like $300 to $400 billion a year that is going into deploying good stuff instead of bad stuff. So this is solar or wind or electric vehicles or geothermal or even electric farm equipment, right? And so I think the sectors that we cover are getting far broader, right? From the hybrid steel plant in Sweden that now runs on green hydrogen instead of coal, or to a lot of the ships that are now being retrofitted to becoming green in preparation for the mandates for the International Maritime Organization. So I think that things are going to get more confusing over time, not less. And that's just in asset finance, right? And then you've got sort of the ESG side of things around, the sort of series numbers that are big. It's like $12.7 trillion of financial managers are, looking to use best practices. And that's a lot of the BlackRock stuff. And I think that people are demanding that folks really pay attention to these things. And I think there's a rational reason for this, right? So when you look at the big news story this week is sort of the Exxon Mobil NextEra news story, where Exxon Mobil was the most valuable company in the world, at least from the stock market perspective, 7 years ago. And today has been dropped from the Dow Jones Industrial Average, right? I mean, and in 7 years, how far the mighty can fall. And NextEra, right, which makes a lot less profit, right? I mean, ExxonMobil makes $14 billion a year in profit. NextEra makes $4 billion a year in profit, is now worth more than ExxonMobil, right? Because people see the growth in NextEra to be a lot bigger, right? And so I think a lot of people are calling themselves sustainable finance these days. But I obviously focus a lot more on the infrastructure capital.
Yeah, and figuring out what counts as sustainable finance is kind of a whole realm in and of itself. Like I've heard people say that if an oil major, meets certain metrics of transparency around their climate risk, that gets labeled sustainable, right? So we're getting more understanding of what that means. I do want to ask you one question because it is timely on the Exxon news. You mentioned the value of the actual company, or really their revenue, is not being reflected in being where it stands on the stock market. So I just want to make that connection there, because Exxon still is a operating company, does a lot of work around the world. We just saw other news headlines that it plans to emit basically equivalent of Greece's emissions in the coming years. It has growth plans and it's finding capital somewhere. So is it misleading to just look at it being dropped from the Dow as an indication of the decline of oil? That is just one standard by which to measure it. What do you think, Jigar?
Well, remember that today, in Europe, they sold less internal combustion engine vehicles this year than last year, right? And they will every year after that. That doesn't mean that we are going to end internal combustion engine production next week, but it does mean that the people who do R&D on internal combustion engines increasingly no longer have a job, because why would you do R&D on a technology that is being phased out over 30 years, right? Now, Exxon Mobil still has a job because they still have to fill up gas tanks and diesel tanks as we phase them out over 35 years. But increasingly, they are going to be also put out of a job by Saudi Arabia and Kuwait, who basically just put straws in the ground and sucks oil out at $7 a barrel, right? Exxon Mobil can't do that. Their average cost to find oil is $40 a barrel today. So the question really becomes like, how much longer, right? I'm not as plussed about their emissions going up because, look, CNBC did a report saying that $100 billion worth of oil and gas infrastructure is going to change hands over the next 2 years. So it doesn't surprise me that Exxon is a buyer and BP and Shell are sellers, right? Fine. So then if Exxon buys, then their emissions go up. I get that. But what does surprise me is they don't actually have a positive vision that they're communicating to their shareholders around, here's how we're going to be relevant for the next 30 years, right? Like, we're going to do carbon sequestration and storage. We're going to figure out how to use our subsurface knowledge to really exploit geothermal. We're going to go to the Salton Sea and help Governor Newsom figure out lithium, which is really an unyielding sort of environment. It's really, really hard. And they've got 75,000 people who are the best in the world at engineering, right? But they haven't explained to us, outside of their misleading ads around how much they're investing in algae biofuels or whatever, what their future profits are going to come from.
Right. Yeah, I don't know if it's Exxon or Chevron or on, the oil industry overall, but there's some research around more money being spent on the PR campaigns of their green initiatives than the green initiatives themselves. John, I want to go to you for this scene setting question, and then we'll dig into clean capital and generate. What are your thoughts here on where sustainable investment is headed and the trends that we're seeing?
Yeah. Well, first of all, thanks so much for having me. It's hard to set the scene after Jigar's introduction because I think he covers it so well. Before looking forward, though, I think we really need to look backwards. I like to look at the next 10 years because I think it's so critical to our space and to tackling climate change. But why does the next 10 years look the way it does? It's because the progress over the last 10 years, right? If you look back to, say, 2000, 2008, then you had the American Recovery Act sort of come in play, and all of a sudden things started to align. But really, if it wasn't for Jigar and others, people couldn't spell power purchase agreement in the early part of the decade, right? They questioned in New Jersey, was there enough solar panels to sit on a FedEx warehouse to provide power? And would those panels last long enough? Well, over time, more and more folks have gotten comfortable with the sort of growth of the asset class. There's been a lot of efficiency across clean energy as a whole. And then, the Morningstar, actually, the director of sustainability, just put out a really interesting piece. I think it was last week or 2 weeks about how ESG investing not only had its best quarter ever for the first quarter of this year before the downturn, but it's actually doing really well through the downturn. And so we never had that problem over the last 10 years. We've had sort of great growth post, the Obama administration, and even the first part of the Trump administration. The economy was great, investing was happening, there's always the question, like, what happens to ESG during a downturn? Well, it's actually doing fairly well. And now the question is, what happens next with the recovery? And if we come forward with a sort of the Biden plan, clean infrastructure type of recovery going forward, there's going to be an additional steroid injected into the markets. And it's great not only for companies like Jiggers and I, but the industry as a whole. It's great for the economy because these are really great job creating roles that are coming out of the investments being made today. Now, what does the next 10 years look like? You know, it's a blend of, I think there's a blend of activism happening. And I mean, you look at what Jim Cramer said earlier this year about how oil was on its deathbed. It was driven a lot by, you know, the efforts of Greta and others driving this great political dynamic social change, but it's equally being driven now at this point by what's happening in corporate boardrooms, right? We talked about BlackRock, ESG investing. You also got to look at like what companies like Google's doing to bring reduce climate across their entire portfolio, or Microsoft going carbon negative, right? It's just really fascinating stuff being driven in the boardroom. So those combinations really, I think, set the stage for an exciting next 10 years in this space.
Yeah, it doesn't seem like there's a week or even a day that goes by without some insurer, asset manager, university endowment, someone is divesting and reinvesting. Mind you, the divest movement, I've learned recently, you know, that's kind of the phase one of this discussion. And now we're very much evolving into green finance. And what is that? I think Bloomberg last year said there was around $30 trillion in sustainable finance, which was up something like 20 to 30% from previous years. And that may not be purely because of divestment. We may be also just adding more money to the clean space, but something to dig into there. Well, thank you for those comments. Let's dig into your specific work. Jigar, I know that in February, Generate, I believe, closed or raised a $1 billion fund. Where does that stand? Who are you working with on that? Put that into the scene here.
Thanks. Yeah, I mean, so Generate, just on semantics, like, so we don't operate funds. This is shareholder capital. So they invested $1 billion into Generate's stock. And the reason it matters is because then it's permanent capital as opposed to funds where you have a fund life and you have to give the money back after 5 years. For us, we can make commitments over 25, 40 years into investments. And I think and that's really what we raised the money for, right? I think part of what we recognize is that while the solar movement and the wind movement continue to innovate, and innovation is essential for us to reach our decarbonization goals, we think that their pathway to big money has been sort of set on the right path to, you know, achieving their goals, right? But when you think about the fact that, you know, whether it's the International Energy Agency or Bloomberg New Energy Finance or whatever, says that to meet 1.5 degrees, we need to be investing at 1.5 trillion a year, not just 400 billion a year. To me, that's not just scaling up solar and wind, that's scaling up, you know, green ammonia and green hydrogen and figuring out electric vehicles and fuel cells and anaerobic digesters and that kind of stuff. Having a permanent balance sheet allows us to do that while we sort out Wall Street. So we can hold $300, $400, $500 million worth of investments in electric transportation or in anaerobic digesters and renewable natural gas, while we help Bank of America or JP Morgan Chase or some of these other companies get up to speed on why what we've done is actually a good investment. And that can take a long time. Remember that Sunrun, I think, started in 2007, maybe, and residential solar didn't really become an asset class that was accepted fully by Wall Street until 2 years ago, right? Probably 2018, maybe 2019. And so that took them 12 years to establish that as an asset class. And so we have to season these assets on our balance sheet for a long time until, you know, the broader marketplace says, yes, it's ready for $500 billion of investment. So that's.
Do you ever get frustrated doing that? Or you're like, oh, I'm taking one for the team here?
Well, we're all taking one for the team. I mean, that's the thing, right? I mean, John knows full well with his, you know, service to, you know, our country. But I think that when you think about, like, all of us play this role, right? Whether it's the community organizer that's going up and, you know, really challenging the local mayor or, you know, county commissioner. I've got a county commissioner who claims to be left of Bernie Sanders here Montgomery County. They just came out with their environmental plan, and it's terrible. We've called a climate emergency here in our county, and he's not doing anything about it, right? And so I think all of us play our role. I mean, we play a certain role, but everyone plays their unique role. All of us together is what's going to get us to 1.5 degrees.
John, tell us a little bit more about Clean Capital.
Sure.
I know you guys have acquired more than 180 megawatts of distributed generation since 2015, and that your acquisitions, let me see, you've doubled your cumulative acquisitions of the prior 4 years, topping 500 million. Break that down for us. What do you do? How's this evolved?
Yeah, just quickly, I want to get to the last point that Jigar just made too. I feel like the exciting part about this space is, you asked about sort of taking with the team. These are still great assets with good returns, right? It's a good market where people are making money. The question is like, how do we accelerate that, right? And get the Bank of Americas and others really coming to the table. So a little history on Clean Capital. So prior to co-founding Clean Capital, when I was at the White House, I oversaw $6 billion in third-party finance contracts that were a lot of energy efficiency contracts, power purchase agreements, driving renewables to the federal government. And like many on the government side of things, I didn't understand finance at all, and had a really great teacher, a guy named Richard Kaufman, who used to be here in New York, but at the time had been at DOE, and really began to understand some of the inefficiencies in the market from a policy perspective. When I transitioned out, I met my co-founder, Tom Byrne. Tom's brother-in-law and I had served in Iraq together. Tom was a general counsel at a private equity firm in New York. He just refinanced his law school loans on this platform called SoFi.com, and said, "Hey, look at what's happening in student loans and in real estate. How do we bring some of that technology into clean energy and drive efficiency in the project finance side of these deals to accelerate the growth of the distributed space?" So the first year we did a transaction that we actually also crowdfunded. The second year we partnered with Jigar and Generate and grew a second sort of core of assets, continue to buy up sort of operating solar. We were buying operating solar at the time because our theory was, our mission has always been to bring new capital into clean energy, talking about how do we get the other capital in. And operating solar was a pretty easy way to do it because it looks like a real estate transaction for the most part, and you can get others up to speed. But because of our work with Generate, and as we sort of grew, we moved to the next phase. And the last 2 years, we've worked with two partners, one Carvel Investors, another one BlackRock. In both of those cases, Carvel had never invested in solar. Now we've put over 300 million out the door with them in 18 months. BlackRock had never done distributed generation before, and now has grown their footprint in that space. And each of these times, Clean Capital continues to graduate sort of into the next tier, where we want to be getting the pension funds and others, those folks you talk about who are divesting, to take that next step of investing. Because the divesting movement has been really great. There's still a slow trickle out of the invest. It's not a slow trickle, it's moving faster, but they're not there yet, right? And we're trying to help pull them over, and then moving into other asset classes. We're moving into new build solar, storage, and really wanted to help sort of finance the climate revolution here.
How does that work? How do you get a behemoth? Sorry, did you want to say something, Jigar? Do you want to jump in?
I was just saying it's a great story what John and Tom built. It's just amazing, and to see where they've gotten. I mean, but it's prototypical of what we need to happen over and over again, which is that you really need, like, BlackRock isn't going to get convinced by any of this stuff through the front door, right? They need to see a couple of years of track record. They need to see that the pipeline's really there, like a lot of the learnings along the way. And that's the whole point of this sort of like, handoff and supply chain of capital.
Yeah.
Yeah, that's what I was wondering. How does that work? How do you get a behemoth like BlackRock interested in distributed solar? So you're packaging these projects, and then what does it look like? What does that conversation look like when you go to them?
So, I think with a lot of the folks, either BlackRock or CalPERS or whoever the more institutionals are, it takes time, it takes a lot of conversation, it takes building trust, but then it takes deals, right? So in the case of BlackRock, we did a transaction with them that ended up being 46 megawatts. It was 60 different assets in multiple different states. They actually saw the deal before we did because it was run by an investment bank. And like many of the institutionals, they looked at it and they said, that's a lot of work to try to transact on that deal when I can look at this 1 or 2 asset deal that's probably the same check size. What they weren't able to see in what we did because of the technology platform we've now built out the last few years is really, we call them night vision goggles, right? We put on night vision goggles, we can see deep in these assets and find savings and value to optimize those assets. So what is that? A corny example, but I love to use it because we bought a system in California that was on an Air Force base. The prior company was paying tens of thousands of dollars a year to mow the lawn. Well, it turns out it was in the desert. No one was mowing the lawn. But because we ended up finding those values and those savings, we can drive better returns. Once we showed that to BlackRock, they liked that step. They liked the asset class. They moved into it, and they've been a good partner for us. But it definitely takes, as Jigar said, a lot of conversation, a lot of hand holding, a lot of education, and then really you have to make the proof in the pudding in terms of how you manage those assets over time, so they see the returns, which is something we also do. They see the returns, and once they see them, and the great thing about DG is when you have a broad portfolio, for instance, in Colorado, we have a couple school districts that have broken their PPAs because they can do it under the Colorado Constitution. It isn't on margins of the return of the overall portfolio, right? It's a pain in the ass to have to deal with from the asset management side, but because this portfolio is in a bunch of, it wasn't in the BlackRock deal, but in a bunch of different states, it really hardly affects the overall returns.
Interesting. So we're talking about distributed generation right now. I guess, is there anything else, Jigar, you'd want to add on that as an asset class? Distributed solar, distributed storage. Are you looking there? Or are you more interested in other areas? I know you've been an advocate for all kinds of technologies that we're not often thinking about, anaerobic digesters, et cetera. But where does DG fit into your work?
Yeah, we do a lot. We just announced our $600 million asset partnership with Altruis for industrial customers and Fortune 1000 customers on energy efficiency, which is just another form of DG. They're all doing corporate PPAs, but like now the question is how do they actually green their actual facilities? Yeah, I guess the thing I'd like to just highlight on that last point is, so when you think about mortgages, right, and you go to the bank and you get a mortgage and they say, well, do you want an interest rate? Yeah, great. Do you want to lock it in for 60 to 90 days, right? And if you go the next week, it's a different interest rate, right? That's because they have a fully efficient market and they know exactly where the paper is going to trade at the like last step, right? And then each person in the supply chain says, okay, to do my job, to make sure that that person is not buying a house that doesn't exist, I need to go take pictures. I need to do an audit. I need to do this. I need to do that. And then that person says, well, I need to add 20 basis points to the cost of the interest rate to pay for me. And I need to do this, and I need to do this, right? And then eventually you get your interest rate and you're paying 3% over 20 or over 30 years, right? That supply chain of data is what John is putting in place for solar, right? And so you have that right now for residential because Sunrun is, doing securitizations every quarter. But you don't have that for C&I. So when someone says, well, what interest rate should I charge you for this solar on the roof? They're like, well, if John's willing to pay this price for it in 5 years once the ITC comes off or whatever, then like, okay, now I know that I can actually charge this much and still make money when I sell it to John, right? And not, take a bath on it, right? And that level of efficiency throughout the chain is only now coming to solar and wind, right? And so it's not even close to there on electric vehicles or anaerobic digesters or renewable natural gas or fuel cells or whatever else.
Interesting. I guess it's kind of a big question. Are people making money in clean energy? And obviously people are making salaries, et cetera, but like akin to the returns that we saw from oil and gas. We started this conversation there and the flows of finance in from dirty to clean. But is there enough money to be made in those cleaner alternatives right now?
Well, I'd say the other way around, right? There's no money to be made in the other side of it, right? I mean, just look at the presidential campaign. The clean energy sector has put in 4 times more money than the oil and gas sector has into presidential contributions, right? And so when you think about who's got
Is that because
money,
they don't have to though? Because they like the oil and gas companies know what they would be getting with the president?
No,
Trump.
exactly the opposite. There's not a single person who is a friend to an oil and gas company. The only reason they're friends is because they fund their campaigns.
Politics.
That is the only reason, right? Like, it's actually hard dollars, right? How do you go to one of your constituents and say, I know they spilled benzene in your backyard, but I don't care and I'm not going to do anything about it.
Right.
You
Destroy
do
your
it
drinking
because
water.
they're going to give you $50,000 in campaign contributions through all their executives, right? And they are basically saying that, like, the gig is up, right? So, I mean, all of the wealth creation in infrastructure is happening in sustainability and in clean now. There's no wealth creation happening in oil and gas.
What if the oil prices spike? I think JP Morgan said in a couple of years they could go back up to 120 or $30 a barrel. And these oil majors are just biding their time, waiting for that to happen. So is this an endless decline, or are we just in a blip? Or should we at least be aware of that?
Well, according to BP, we're in an endless decline, right? BP called this the peak. Now, you can say that they don't know what they're talking about, but it's not the EIA, who we all know doesn't know what they're talking about. It's BP, right? And so, like, I mean, in general, they could be wrong for sure, right? But, you know, like, I think when you think about where we are on the electric vehicle curve, right, where Europe is continuing to go up, and then, you know, Governor of California has said that they're going to ban internal combustion engine sales in the state of California in 2035. I mean, we're certainly on a trajectory now where they should be selling less of the product over time. I don't think JP Morgan knows what it's talking about.
Yeah, and it's not going away tomorrow, right? It'll be, I think, is Jigar, even if they start selling those, you know, their cars are, people are, I mean, I just sold a 2004 Honda Santa Fe the other day. I got when I got out of the Army. I've had it for nearly 15 years, mostly because I bet my dad I'd never sell it, and I didn't have to until the end. But you hold those cars for a long time, and, you know, there will be a decline. But I'm going to go back to the point Jigar made on politics. I was actually today listening, I was in the car listening to 1A, and they were discussing climate, and one of the journalists that was on was discussing the debate and was making a point that Republicans were, you know, making the case around fossil fuel cells or fossil fuel jobs because they were the current jobs out there. And I wanted to reach through the radio and scream and say, what do you mean those are the current jobs? The current jobs are clean energy jobs. There's way more clean energy jobs out there now than fossil fuel jobs. But we as an industry have been really on the nascent end of making that case. We have to be stronger about it. We don't have our own American Petroleum Institute. They're trying. There's different initiatives to sort of bring that together, but we're not putting $50,000 in the pockets of members to get them to sort of support our cause.
Clean energy needs to get a little more, grease in the wheels here.
Yeah, we gotta get aggressive.
It's not grease, right? Remember, you're putting infrastructure in place that doesn't pay back on a straight basis for 13 years, right? Like, with the cost of capital on solar and wind, you don't actually get a return of your principal for 13 years, right? Well, that thing better have a license to operate for the full 20 to 30 to 40 years, right? And it doesn't matter whether it's a Republican, Democrat, independent, crazy lunatic who's like representing that district. You want to make sure that they know that this piece of infrastructure here employs people, pays tax revenue, right? In West Texas, the wind property taxes that they pay are funding all the schools in West Texas, right? And if you want that to keep happening, well, they need a mandate to keep operating. At the day that they no longer have that mandate, the schools no longer get funding. And I just think that we are naive. Like, when you think about like the new article that Jason Bordoff wrote in Foreign Policy Magazine, where he said, look, we need to care about foreign policy. It does matter. We have a bunch of people who think it's just fine to say, I just did a spreadsheet and Algerian hydrogen production piped over to Germany is way cheaper than making it there. What are you talking about? Do the Germans trust the Algerians? Do they actually want to do business together? Is that pipeline going to be allowed to operate without interruption for the next 40 years? Like, at some point, you need to fund that conversation. And whether you're funding the local politician or whether you're funding, as John was suggesting, API and all these institutes, right, and think tanks, that's how this works. That's how you get a mandate to operate in Azerbaijan or Cote d'Ivoire, or all these places these oil companies have been operating for the last 50 years, right? It's not because like, oh, you're making money and the world needs oil, so we're not going to mess with your infrastructure.
But who comes together then? Just to follow this idea, I think it's really interesting. Is it all low carbon technologies get together and forge some trade group? Like, because not they may have different interests depending on distributed, centralized, which market we're talking about. So what would that even look like?
Yeah, first of all, I think they've been trying, right? There's been conversations among the ACORs and SIAs and AWIAs, and there's a new recent effort that came out, which is it's an interesting attempt, but it's very utility scale focused. So yeah, the politics of that matter. I feel like mostly though, it's because we have not yet grown enough as an industry just to go on the offensive and get a couple of major sort of funding initiatives that will bring those things. I don't want to say that we're starving the industry groups as an industry, because they're asking for a lot of money and they're trying not to, but we're not overly supporting them either, because a lot of smaller companies, including Clean Capital, we're members of all these groups and we're not paying our maximum yet, and we're trying to grow as a company. But in the oil companies, API, they are, right? There's a lot of money to be staked. A lot of people are putting money into it. And then those differences sort of fall away a little bit. But two, I would, just not to change topic for a second, but I think we also need to go on the offensive, because we as an industry are constantly on the defensive. I think 2021, if the politics change in Washington, it gives us a chance to go on the offensive. But I think about recent FERC fights over net metering, for instance, right? We got caught by the utilities who made a play at trying to undercut net metering. And, honestly, like I'd argue that the solar industry, for the most part, got caught unprepared to fight back. We fought back, and I think successfully. But
which state are you talking about, or just in general?
Well, no, this was to ban net metering nationwide, and FERC ended up, for procedural reasons, throwing it out. But I mean, it could have been really bad. I totally agree with John there.
And it was an offensive play by the utilities, right? They were trying to get ahead of the game, and we're not there yet as an industry. We need to be getting there. And I think that's what the next 10 years honestly presents, is a chance for us to get more aggressive on policy. And it's not a bad thing. It's not politics. I mean, it is politics, but it's it's us trying to lay the framework to continue to disrupt the status quo, because the status quo has been fighting back so they don't get disrupted, right? And that's what's happened in the last 10 years. Now it's us to sort of grow into that next phase as a industry and start moving ahead in terms of being the big player at the table, which we are just starting to become.
Yeah, I mean, just to add to that, so what I'd say is that, I would say that roughly 1% of our revenues, right? So in the United States, the revenues of the solar and wind business is something on the order of like 40 to 50 billion a year. Like, roughly 1% of our revenues need to be spent on this effort that John's talking about, right? So 1% of $50 billion, right, is $500 million. That is not the budget of the trade associations and all of the lobbyists and all of the political contributions and everything else, or marketing for that matter, right? You add all of it together, we're not spending $500 million, right? And then when you think about the amount of time allocation, right? John and I and yourself, Julia, like we spend a lot of time on education. For John and I, I'm not sure that it's fully compensated, although we could say that we get more business as a result. But like the amount of time that we spend on the podcasting that we do, or the writing that we do, or whatever, I take it very seriously, because I believe that it actually does promote a healthier industry. And I know John takes it very seriously as well. But not everyone does. And I think it's critical to recognize how much time and effort it takes to be on the offensive. It's not easy, and it requires just a tremendous amount of like prioritization of those activities, because you believe it's essential to the growth and dominance of our sector.
We didn't launch a bipartisan in this partisan age podcast because it was a moneymaker. I'll just throw that out there.
Yes.
But so I hear you on the role of communication and education. Sorry, John?
No, just one thing, Jigar, I think you're 100% right. And it's hard I'm constantly making the case back to my partners and investors on what it's doing for us, because it's not an easy one-to-one comparison, right? It's like, well, what is this? That said, it's also not super expensive to run a podcast. But the other thing is, as an industry, I'm sort of talking to the audience here, it's sort of dependent on each of us to take some additional steps. So for instance, we went into our Salesforce, which is where we manage some information on a lot of our projects. We actually added congressional district in that in the data we collect. And then we put together a letter every year and send to all those different members, right? We've got 170 some odd projects, and many are in Republican seats. We send them a letter letting them know we're there, right? And you know what? It's done by an intern. It's not a super major part of our shop, but it's taking those initial steps. We all need to be thinking about that and taking those steps as the industry continues to grow.
That nuance, I think, is so interesting. So this shameless plug for Political Climate, we just had a woman named Caroline Spears on today's show. She created Climate Cabinet Action Fund, and she's created this playbook of hundreds of targeted data for each district. And these are actually state legislature races. So these races can be as low as $50,000 a race, not presidential, but these are the ones that are passing the 100% clean energy bills in Virginia, et cetera. And the bills in Colorado, like 12 of them on clean energy. Those races, sometimes those legislators and candidates have zero resources, and they don't even know how to engage on climate issues because they just don't have the staff for it. So like having someone like Caroline put together that package that includes local data on their community, how previous people voted on issues in the past, that just never existed before. So my plug there is for Caroline, but also check out our show with her. So you get
she's amazing. I did her fundraiser on Tuesday. And part of the comment that I made on the fundraiser was that the only place big policy occurs is actually at the state level. For those of you in the audience who thinks that there will be any big policy that comes out of a Biden administration, you're nuts, right? Like what we might get is a big stimulus bill, great, right? But you're not gonna have like a bill pass Congress that says we're gonna ban internal combustion engines by 2035. Or that we're going to have 100% clean energy standard by 2077. That's never going to happen. Like the Democrats themselves can't get a majority of votes within their own caucus for that, right? So I mean, it's one thing for him on the campaign trail to say we're gonna wean ourselves off of fossil fuels by X date. It's another thing to actually pass that through the U.S. Congress. I think the federal government's going to rain down a whole bunch of money, but it's going to be states that ban internal combustion engines. It's going to be states that pass 100% clean electricity standards. It's going to be states that actually, figure out how to educate farmers on, soil carbon, right? And the federal government will provide that money through the USDA, but it won't be, the federal government who says all farmers shall do this.
Right.
And the vision too, right? I think people were watching more. I know people in the clean energy world would maybe watch some of the debates and be like, "Oh, Biden campaign, you're so close, but so far." They don't question the assumption that clean means bad for the economy. We're still kind of there, and it's relayed in the way that they talk about jobs. John, you mentioned that point a moment ago, and not really making it clear how many jobs are in the clean energy sector. It's still considered this kind of niche environmental movement when it's honestly a lot of capitalists making now a lot of money.
Yeah.
I do want to bring in a question. We're going back to oil and gas here a little bit. A question from Leslie Hayward. She says, ESG has been facilitated by underperformance from oil and gas equities, but ESG doesn't necessarily end oil dependence. What happens if oil and gas equities become sources of investment returns again? I guess I alluded to that with the JP Morgan comment, but just to put it to you once more.
Yeah, no, well, this is why I really hate beating up on the oil companies. Like, I think it's fine, right? The most recent thing is that Exxon lied to us and that they are actually thinking about raising emissions, which they didn't lie to anybody. Everyone assumed that they were going to raise emissions. I think that if you really want to end emissions, you end the demand for the product, right? So you have to ban internal combustion engines. You have to stop using bitumen for roads, right? Everyone knows that if you made roads out of cement, it would actually reduce friction and actually improve fuel economy by 3 miles per gallon, right? But
I can imagine those conversations in DC. I'm sure there's a lobby for that,
Right, but it comes out of the refinery stack, and so people subsidize it and say, fine, let's use it for roads, right? I just think that we're in this situation like tobacco, right? We villainize tobacco. Fantastic, right? Now they basically, everyone who smokes today pays for our healthcare costs. Okay, great. But we didn't ban smoking, right? And so I just think that we do ourselves a disservice by, I was just talking to Steve Kretzman the other day from Oil Change International. I love that guy. He spent his entire career, right, 35, 40 years basically figuring out how to get World Bank money and that kind of stuff to stop going to oil companies. But I told him, like, you're not successful with that strategy. You're never going to get Exxon and BP to become pariahs from investors and to get them to stop working on oil. Like, if you want to end oil consumption, you have to end oil consumption, right, by the consumer.
But even the Jason Bordoff piece, I think, if I'm remembering correctly, talks about how there are other like nationally owned oil companies that are going to continue operating. In fact, I mean, you're even saying before, Jigar, they can sort of put a straw in the ground and develop the product cheaply. So it's not like oil is going away, especially when you look at those companies. Like BP, I think, is a relatively small portion of the market. So there's more to the story.
But that's because oil demand is not going anywhere. I mean, this is what I'm saying is like oil demand, let's say it goes down by 2 or 3% a year, right? Fantastic. That's still a big number, right? Yeah. And, you know, existing oil fields, you know, have a natural decline rate of 8% a year, right? So unless all of oil declines by 8% a year, you still need to invest tens of billions of dollars to actually just keep it, you know, at 2 to 3% a year, right? And so I just think people in general like get way too simplistic about this stuff and then want to, you know, hop in a plane to go to Disneyland or whatever it is that they want to do, which is enabled by oil, right? And so
are you taking away Disneyland, Jigar? Oh,
well, clearly the state of California is taking away Disney World. So like, you know, I just think that people need to be thoughtful about this stuff. And look, I like to beat up on Exxon as much as the next person. But like what we really need to do is beat up our governors and say, look, you know, here's how much local air pollution comes from cars. We should be banning internal combustion engines just because you care about your neighbor that has asthma.
And go after the demand thing. John?
Yeah, and to take it off the oil and gas and put it back just on the ESG for a second, one of the things I think we also need to do is continue to sort of institutionalize ESG, where, you know, first of all, things like greenwashing aren't really credited. But it's, you know, I've got one of my best friends from college who lived in Washington for a long time is a lawyer in Paris, and he works for the oil companies, and he does governance stuff with them, and he tries to uncover, you know, things like bribery in Nigeria so they can report to the SEC before it becomes an issue. He looks at risk. And now for the first time, he's really looking at climate risk. So this isn't something that came out of the environmental movement. This is an industry risk analysis lawyer who wants to get smarter on climate because he sees it as a major emerging risk to the companies that he's working for. And, you know, it's us educating those accountants on things like carbon accounting in the future. So it's not, you know, it becomes an institutional thing. The more we can do that as an industry over the next few years, I think the better off we're all going to be. So it's not going to be seen as, you know, as this just a side ESG thing, right? It becomes a mainstream initiative across these companies. And I look at what Ceres is doing and some of the organizations, they're starting to take these steps and then building bridges into, and I have no idea what the accounting industry organization is, so I will lie. But if we reach out to the accounting, if we show up at the accounting convention and have a series of dialogues around climate risk and educate them on it, like we need to be doing those steps now. And those are the type of things, by the way, we talked about earlier, that we as an industry should be financing, right? But so our think tanks can be doing that, right?
I mean, the financial sector may do it for you. The Commodity Futures Trading Commission just in recent weeks put out a landmark report. I think the most comprehensive acceptance of climate risk and explanation of that issue to the financial sector by financial industry players. And this report was actually done by 5 commissioners appointed by President Trump, I think 2 Democrat, 3 Republican, but that is a huge statement when you have that. I don't think it's been fully adopted by the Trump appointees yet. A sort of subcommittee created it. But that aside, it's a statement from the CalPERS of the world, pension funds, other investors and banks, that climate risk is real. And in fact, the US economy cannot support itself in its current form because of the future climate risk that they see. So it was a dire picture. and I don't think any clean energy, well, I guess there's some environmentalists involved, but it was coming from the financial sector itself.
Right.
No, that's right. I mean, but think about it. I think even when you think about the Green New Deal and all the Democratic presidential candidates, right? I mean, I was in touch with the staff of at least like 6 of those campaigns. And I remember they were not that serious about this stuff. They were like, fine, poll numbers, whatever. And then, like, you know, one day they came up to me and they were like, Jigar, you know, California's on fire. South Carolina has like major floods. Iowa's never had this number of floods. Houston's underwater again. Like we're having this other issue in like with violent tornadoes. And they're like, Jigar, is this thing like actually real? And I was like, what the hell is wrong with you? Your own candidate has been talking about this stuff for a long time. Of course it's showing up in the polling data because like people's like assets, right? Remember the whole report that was done by, you know, Hank Paulson and Bloomberg and Tom Steyer, right? You know, that Kate Gordon was a part of. Like, I just think that like there's a lot of these reports and things that are there. And now it's real. Like there was that New York Times front page story where that woman who was living outside of Charleston has been trying to sell her house for 2 years and can't get back what she put into it because everyone recognizes that it's a declining asset, right? That like sea levels are rising and that house is going to be underwater in 15 years. It's smacking people in the face, and then we're like surprised then that, you know, these things come out.
Did you see the Michigan ad, the recent Michigan ad, the cherry ad that just came out?
Biden's climate campaign ad. I'm working with farmers in upstate Michigan, or I think it was northern Michigan. Yeah, that was effective.
Powerful story.
Change of the cherry taste. I mean, I think it is hard when you follow this every day not to be a little discouraged because, I mean, the way that climate change works, once you have these impacts, it's not like you just flip a switch, deploy a bunch of solar, the problem is gone. There's feedback loops. The science is actually much more complicated. So it is a little disconcerting. So I guess the question there is like, we've been talking a lot about oil and gas divestment, shifting money around, but can the clean stuff scale fast enough still to actually impact the weather events we're seeing today? Like, let's draw that line between the disasters and the green stuff you all are doing. Is there, I hate hope, it's a bit of a mushy word, but is there a possibility?
I have hope. I mean, I feel like there's a lot that you know, we focus on energy, right? And I think it's a huge part of the mix. We also focus on electricity, you know, providing to the building stock. You know, it's what's going to happen in transportation. It's what's going to happen in agriculture. It's what's going to happen in water. These are all things that, you know, hopefully will begin to catch up when people are getting the ESG investing beyond just the energy sector and into these other climate impacts, right? I'm hopeful. But I also recognize that, you know, we are way behind the curve in what we need to be doing to addressing these things. And as Jigar said earlier, we're not even close to the scale of deployment we need to be at right now. Both on I think the technology is there for a lot of this. I think the infrastructure and the policies are aligned or coming aligned. And now, you know, can the market really begin to push into these spaces more? And, you know, I look at 2030. I don't, you know, there's a lot of great targets out there. The president or Biden's got a net zero target for like 2035. There's like 2050 goals. There's 2070. But the next 10 years are huge, and we need to be going after it the next 10 years if we're going to really even hope to be at a place that we can keep it below even 1.5 degrees.
Yeah, getting to 1.5 trillion each year in green investments are needed to reach net zero emissions.
Yeah.
You're saying that is a lot of money. We're at, I'm just looking here in some notes, I think around 560 billion a year right now. So Jigar, what's your outlook on that? Where's the money going to come from, and what's it going to go into? Maybe that's a better question.
Yeah, no, I have a lot of hope, but I think that people fail to understand the mechanisms of hope. Like, the goal for us is to give Biden or other people like Biden, whether it's Justin Trudeau or other folks, a spine, right? That's my entire goal in life, right? They did not have a spine in 2008. We're giving them a spine now. We're saying to them that we are ready, believe in us and our ability to get to 1.5 trillion, right? And there is no pathway whatsoever for sustainable finance to get from 560 billion to 1.5 trillion. Like, that is not a linear line. That's not how this works, right? The way this works is that we convince people that this is a better future than the future that they are actually, you know, on, right? The trajectory they're currently on. And then you have to have World War II level investment, right? The federal government's gonna have to come in and say, look, we're going to put in, you know, carbon sucking stations at every military base in the country, and we're going to start sucking carbon out of the air. We're going to ban internal combustion engines and we're going to all move to electric vehicles. We're going to like do this stuff. Remember what we do. And I feel like people just don't know the truth. And so they don't quite understand these things. China is building up like real estate portfolios right now in the Caribbean, right? So just last week, the Trump administration released $2.5 billion for green tourism into Haiti, right? Not because they care about it, but because they want to fight back China. Like, and we're begging for $100 million for some subsidy for like, a gigafactory, right? The US government does this kind of stuff all day long when it's about defeating Russia or defeating China or defeating whatever, right? Now we're about preserving our way of life. We just spent $4 trillion that we didn't know we had on COVID, right? So $1.5 trillion is not a lot of money. And the expertise that we need to be able to get us off of fossil fuels and off of dirty coal plants and increasingly like needing to electrify everything and getting us off of natural gas and all these things, all of these technology pathways have been invented. We know how to get there, and it gets us to, you pick the number, 75% of the goal is ready to go. The other 25%, yes, we still need more R&D, we still need more work, we still need more breakthroughs to get to. But it shouldn't stop us from getting the first 75% done. But my hope comes from the leadership of our industry and the fact that we have now shown that it is possible to do things at a 1/10 scale, a 1/5 scale, right? And now the government has to do what they need to do to get us to 100% scale.
How much do you think the private sector, the financial institutions on their own can meet that 1.5 trillion a year? And what would get there? Is it like building more relationships with pension funds? Is that like the next target area?
No.
What do you target on that side of it? Outside of government
guarantees. No, this is not going to happen with all the stuff that you're talking about. This is all government guarantees. Goldman Sachs already went through that thing, right? They said we're going to do $1 billion in clean energy, and we're like, yay! This was like in whatever 2007, right? Then in 2010, they're like, we're going to do $10 billion of clean energy. We're like, this is amazing. And now they're like, we're going to do $100 billion in clean energy. Whoa, that's amazing. That's unprecedented, right? And next week they'll say 200 billion, right? But the way to get to $1.5 trillion is for the federal government to say, we will guarantee the repayment of these loans. That is how this works. That is what the Federal Reserve is doing right now under COVID, right? Like, I just think that we are completely like brainwashing ourselves around capitalism. I am the biggest supporter of creating climate wealth. I have a book called Creating Climate Wealth, right? I believe climate is the largest wealth creator of our lifetime. I say that all the time. But that doesn't mean that there is any chance that the private sector solves this problem. It is not possible. The private sector proves to the government that it's not foolish to solve this problem, right? That is our job, right? Our job is to prove that we can actually build 1,800 anaerobic digesters. Great, we need 18,000. Great, the government says make it happen. Right? Like, that is the goal of this whole thing, is to prove to politicians that we're not wasting their money, right? And then what Goldman Sachs and JP Morgan and all these people are saying is, just give me a government guarantee and I'll give you all the money you want at 1.5% interest.
Yeah, and the reality is with a guarantee, you're not going to, the reality of spending that down is very limited. I mean, these projects have proven to be cash flowing, those low interest rates will be met. Those guarantees will barely have to get spent.
Totally.
Yeah, absolutely. And having sat on the government side, one of the things that's lacking on the government side, and I was a major case of this, people don't understand the finance piece. So they think about it having to be public monies versus public monies that can unleash the private money or support the private money, right? This is what Richard Kaufman ran into so hard. Yeah, all the time. I mean, I remember the first time when I was at the Pentagon, we had a gigawatt goal for the Army. He came across the river and met with us. He'd been at DOE, talked to us about securitizing our power purchase agreements. He was speaking Chinese to everybody at the table. No one had a clue what he was talking about. Right. But he was having the same problems when he went into the White House and was talking to folks negotiating the Paris Agreement. They didn't understand the finance side. So we have to go in and help educate folks that, hey, maybe MLPs are important, or REITs, or hey, these tax credits are great, but how do we really get past the tax credits, right? Because it's we're all trying to kill each other trying to find investment tax credits today that are out there.
Oh, it's nuts. It's the
Nuts.
tax credit stuff was good when President Carter invented them and Reagan made them popular, but now we don't need them anymore. We need, well, I mean, this is where this is going. And I think it's important for everyone to get what John is saying through their head, right? Like, we need people with John's expertise to join government, right? So if Biden really does win on November 3rd and everyone should vote, then people got to raise their hand and say, yeah, I'm willing to go into government, right? That's how this works, right? Like, I just think that we have this magical, mystical sort of unicorn-like dream that the private sector is going to solve this, and that we won't have to figure out this Republican-Democrat divide, and we're just going to make this good business and all that stuff. That's not how this works, right? We're basically taking technology from $1 million scale to $1 billion scale to $1 trillion scale, right? And then the government's got to come in and say, okay, we're going to take it the rest of the way, right? That's just how this works, right? And I think that that means that expertise has to be there in the government. It wasn't there, unfortunately, in 2008, but hopefully it can be there going forward.
All right.
Just to flip around for a second, the expertise that went in the last 4 years, that went into the EPA, for instance, or Department of Interior, these guys went in with their knives. They knew exactly. You don't hear about the rules and regulations the EPA is slicing up, but the head of the coal industry went in to do it, and he's masterfully destroying our EPA regulations with a knife.
Yeah.
Right?
I think there's just reporting from Rhodium Group today that even a Biden administration may not even be able to reinstate some of those rules because of the complications, the regulatory complications. So it's not as simple as unwinding things.
Yeah, it takes years. It takes years through the processes to get it done. They knew they went in and they knew what they were doing. Andrew Wheeler's not out giving speeches. He's cutting regulations every day.
That's right. That's right.
I mean, it's so interesting just to pull that curtain back on sustainable finance. It's look, we can talk about the banks, the pension funds, the insurers. It's exciting space. You all are on the ground moving a lot of money, but it kind of gets back to politics and the policy kind of no matter how you go at it.
And Julia, thinking about the invest divest thing you started with, it's also taking that when people are all excited about their divesting and these university endowments are announcing, we need to be asking the next question then. Okay, are you investing?
Yeah.
Right? Are you investing?
Yeah.
It's great that you've divested. Awesome. Now let's take the next step, because it's going to take them years to understand the space, get the consultants they work with. They all got their consultants ramped up to understand the space. And they're looking at a backlog of real estate transactions and other transactions. How do we get ours to the forefront so that their money continues to move?
Yeah, I mean, I do see as just a journalist and writer, communicator in this space that there are definitely different camps, and even within the climate community, if you will, and they don't always align. And there's definitely going to be some conversations to be had there around. I know some people in the clean energy world who look at some of the climate activism and just say it's way too top down. We need more market-based mechanisms here, and then folks in the climate space who don't fully understand the business side of clean energy and how that needs to grow and be robust and have returns in order to fulfill the goals. So definitely a link that needs to be made there, I think, and strengthened. And with that, we filled a full hour. I was even worried at the beginning of the discussion that we wouldn't get there. Silly me. Well, Jigar and John, thank you so much for speaking with me, and thank you to Brian Scott for having me on. I'm Julia Pyper. Download the Political Climate Podcast wherever you like to listen, and the Energy Gang, of course.
Experts only.
And experts only. John's podcast as well.
Oh, Julia, your log rolling beats.
Sorry.
I've 10 listeners. Give me 11.
Remember to like and subscribe.
Oh.
All right, we're done here. Thank you all so much.
Thank you. Thank you,
Thanks.
Julia. Thanks,
Take
Jigar.
care.